I'm Doris. I'm here to show you about the market updates today. Today, the U.S. stocks traded for the week's close, and the week's gains are mixed. All three major indexes post positive gains, though. The market closely watched the second quarter earnings report on U.S. stocks, and Wells Fargo, J.P. Morgan, and Citi all beat expectations. In the U.S., the University of Michigan Consumer Confidence Index in July exceeded expectations. All three major indexes gained this week. Dow Jones up 2.29%, S&P 500 up 2.42%, and Nasdaq up 3.32%. On Friday, J.P. Morgan Chase, Wells Fargo, and Citibank announced their earnings report, one after another, officially opening the curtain on the second quarter earnings report for U.S. stocks. While J.P. Morgan, Wells Fargo, and Citi all beat expectations in Q2, expectations for Q quarter was pessimistic, with analysts forecast earnings for S&P 500 companies fall about 7% year-on-year. This will be the worst quarterly earnings since the second quarter of 2020, while the earnings of S&P 500 companies fell 31.6%. The release of the PPI for June on Thursday showed a weaker than expected increase in inflation, further confirming the market perception that the inflation was steadily falling as pointed to by the weaker than expected U.S. CPI on Wednesday, leading to optimism about most traders that the Fed has finally won the fight against inflation and that the rate hike cycle is coming to an end. But it's still possible that the Fed will raise its benchmark interest rates later this month. Central banks officials continue to warn that it may still be necessary to raise interest rates more than once thereafter. Money market traders still expect the Fed to raise rates by 25 basis points on July 26, but they have reduced the likelihood of another rate hike this year. Mark Hafe, Chief Investment Officer at the UBS, said, "The U.S. data is undoubtedly encouraging, with the likelihood of a soft landing by the Feds increasing with each data point showing strong economic growth and falling inflation. Investors are now considering whether a strong economy painted by recent data will push the stocks higher by the end of the year." Bill Mertz, Senior Investment Director of Wealth Management at United Bank, said, "Most stock and the bond indices rose today as economic data show inflation and have fallen rapidly and the labor market remains strong." While we awaited our second quarter earnings, optimism that inflation will continue to fall has prompted investors to chase bond stocks. He said, "Investors are also buying bonds aggressively as they expect the Fed to raise rates only once more this year and cut rates start 2024. Bank of America FX strategist Claudio Payan and Ancencios believe that a soft landing for the U.S. economy is unlikely. They call the dollar's recent decline reasonable, but the current weakness looks unsustainable unless the U.S. economy achieves a soft landing." On Friday's economic data, the preliminary value of Consumer Confidence Index in July was 72.6, 65.5 expected, and 64.4 previously. Benefiting from high interest rates and acquisition of First Republic Bank, J.P. Morgan's second quarter revenue and net profit both exceeded expectations, with earnings up per share 70% year-on-year, and the net interest income hit a record high for the third time in a row. After the data was released, J.P. Morgan Chase U.S. shares rose nearly 3% pre-market and have risen more than 10% so far this year. J.P. Morgan CEO Dimon said in an earnings report that almost all of its businesses have achieved sustained growth. The U.S. economy continued to be resilient, consumer balance sheet remains healthy, and consumers are spending, albeit at a slightly lower pace. The labor market has softened, but job growth remains strong. However, he warns that if there are still significant risks in the short term, noting that the consumers are about to run out of cash or buffers, high inflation and high interest rates continue to cause shocks. In an interview with The Economist released this week, he said, "It was likely that the U.S. will fall into recession within the next 6 months, though he wasn't sure whether the extent of the recession will be mild or severe." Revenue increased 34% year-on-year. Net profit increased 67% year-on-year, as the interest income hit a record high for a third time in a row. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.